Welcome to Fun with Annuities, where every single week I welcome a celebrity guest expert that can help you maximize Chapter 2 of your life. Listen, learn, laugh, and love every minute of the most unique financial podcast on the planet. Let's get to it. Welcome to Fun with Annuities. I'm your host, Stan the Annuity Man, America's annuity agent, licensed in all 50 states. So glad you joined us on all major podcast platforms, and for the brave out there watching me on the Fun with Annuities YouTube channel, so you can see what type of logoed gear I have on and the color scheme that always match to go with my outfit. Today's topic is the new realities of annuity recommendations. Now, typically I have guests on this podcast because they are smart people, they're smarter than me, and we learn a lot. But there are times that I have to step in and do a commentary on the annuity industry that I'm the only one that can answer it, because I'm the guy out here and I'm in the weeds, taking the bullets, talking to people, working with my team and all of our offices to make sure that things go smoothly, paperwork goes smoothly, applications get issued, contractual guarantees are what people want, etc. Now, with that being said, we are certainly not perfect. We certainly strive to be, and we are constantly working on our best practices, the protocols that we put in place, numerous sets of eyes on everything. But even with that, there's human beings involved, and human beings make mistakes. So, as you well know, I've been doing this for a very, very long time. My pedigree is from the Wall Street side with Morgan Stanley and other firms like that. And then I became Stan the Annuity Man, founder of the Annuity Man, LLC, to bring some clarity out here in the annuity world. We look at annuities just for the contractual guarantees. You own an annuity for what it will do, not what it might do. And we have developed a very unique process to determine if you need an annuity, and if you do, which type. There's not one type of annuity, as you know. Just as a reminder to all you annuity haters that are watching this, so you can put evil comments at the bottom, which go ahead, do that. I'll respond. Everyone that's watching this that has a Social Security number already owns an annuity. It's called Social Security. If you have a pension from your employer, then that's a second annuity that you own. Arguably, RMDs from your IRA, required minimum distributions, forced payments of your lifetime, arguably that's functioning as an annuity. And as you've probably heard me say numerous times, there's such types as CD annuities, like multi-year guarantee annuities, that function like a CD. So enough about the hate all annuities. But what we've done, if you go to theannuityman.com, we have a new website at the time of this taping that's being tweaked and improved. And we're always trying to improve and make the consumer process a lot easier. And I always ask two questions. What do you want the money to contractually do? And when do you want those contractual guarantees to start? And I have an acronym called PILL. P stands for principal protection, I stands for income for life, L stands for legacy, and the other L stands for long-term care, which means that if you don't need to contractually solve for one or more of those items in the PILL, principal protection, income for life, legacy, and long-term care, you do not need an annuity of any type. Never buy an annuity for market growth, potential, hypotheticals, theoreticals, unicorns chasing the butterflies. So the two questions really help. The PILL thing helps. So from that, it's pretty simple. I always say annuities are commoditized, meaning that there's not just one annuity that's better than the other. We have to determine what type fits, if at all, any type. But let's just say you said, Stan, I need lifetime income and I need to start immediately. That's a single premium immediate annuity. If you said, Stan, I need to protect the principal, I don't want to lose a penny, and I want to just take the interest off the top, that's typically a multi-year guarantee annuity. There's arguments from agents out there yelling at the screen that that's also an index annuity. An index annuity is a CD product. You are right about that, agents. Thank you. But there's no guarantee on the return like there are with MIGAs. So it's very basic to me. I always laugh when people say, boy, this is really complicated. It's complicated because the industry's made it complicated. Agents make it complicated. But ear scratch. For the people on the podcast, I had to scratch my ear. Anyway, podcast not watching. But it's not that complicated. It's really not. So when we're talking about annuity recommendations, and when you schedule a call with us at theannuityman.com, you're either going to get me or you're going to get a much smarter person that's been trained by us that talks like me, except without the accent. They're smarter than me. They have a higher IQ than me. But there's a possibility that you get me because, as I've told my consultants who now surround me, like bodyguards, and they're like whispering in my ear, Stan, we're not really sure you need to be on the phone as much as you like. And I'm like, this is what I do. I like talking to people. I like listening. It makes us a better company. So there's a possibility when you schedule a call at theannuityman.com, moi, yours truly will call you right on the dot. And people are like, is this really standing in the man? I'm like, yep, in the flesh. You got it. Well, heck, I'm glad to meet you, Stan. I've been watching the videos. Great. I'm glad you have. So if we ever get to recommending an annuity, let's just say we go through that and I say, okay, this is appropriate. And we talk about your overall assets, not your investment, but just your assets to make sure it's suitable and appropriate. And by the way, the annuity industry recommends that no more than 50% of your investable assets go into annuities of all types total combined. Okay. That's MIGA, SPIAs, DIAs, QLACs, income riders, index annuities, variable annuities, whatever it is, total 50%. And it is a suggestion, not pound the table, but we really go by that because you should not put more money into annuities than you need to. In fact, you should use the least amount of money to contractually solve what you're trying to solve for. So it's pretty simple. You tell us, you answer the two questions. We talk about the pill. We talk about your overall asset allocation. We talk about your goals. We talk about what you're trying to achieve. The fact that annuities are contracts, they're not investments. We go through all of that with you. Okay. No pressure. I always tell people, you make your decision on your terms and your time frame. We're not a hammer looking for nails like most agents. But here's what's happened since October the 3rd. You're saying, wait a minute, Stan, October 3rd, what year? 2022. At the time of this taping, which is beyond that, but October the 3rd, 2022, I'm pretty sure I'm right about this. That was the first day that multi-year guarantee annuities, fixed rate annuities, the annuity industry version of a CD, offered a rate over 5%. And it's been a long, long time since that happened. So, but when that happened, it changed things. And I always say that what happens when the dog that's chasing the car catches the car? What does the dog do with the car, right? Well, in the annuity industry, annuity carriers were the dog chasing the car, chasing people to, come off the stupid comment of I hate all annuities, dumbest comment of all time when every person with a social security number already owns an annuity. And the idiots that spew that are idiots, whether you're on TV or radio or you're just a person at a cocktail party. If you say I hate all annuities, you need to shut up. You're dumb as a box of hair. Okay. But when that happened and people could get a guaranteed fixed rate of 5% or more, then things changed. A lot of annuity companies were the dog that caught the car. Now, what does that mean for the consumer? Well, if you tried to buy one of those fixed rate annuities during that time period, if you're buying it from us or someone else, that's fine. You found out, like we found out, that a lot of these companies wrote checks with their mouth that the rear end couldn't cash. What does that mean, Stan, in industry speak? What that means is it was taking a long, long, long time to process the paperwork. In the past, we never used to think about that. We never used to say, well, does this company process paperwork quickly? Most of them just did because it wasn't an overflow of applications coming in. Well, all of a sudden, at October 3rd, you had tons, FedEx truckloads of applications coming into these carriers. It was great for the annuity industry up to a point. And that point was when they couldn't process the paperwork. Now, let's talk a little bit about reality. And I've been in the financial services business pretty much my whole life, okay? I've seen it all, heard it all, done it all, thought of it all, etc. But I'm I'm going to get on the annuity company and annuity carriers. And by the way, life insurance companies issue annuities. So we're talking about life insurance companies, but we can call them annuity companies as well. Annuity companies, I'm going to defend them a little bit here, even though they were the dog that caught the car. And let me tell you why. If you are an employer out there, or you work in a large environment that they're hiring people, it's hard to hire quality people. Can I get a employer amen high five on that? I mean, I'm an employer. I own 100% of the Annuity Man LLC. We are a big company, probably the biggest, baddest company out here. Have a lot of employees, proud of them, but we're always hiring. We're always looking for talent. We're always interviewing. We're always running ads. We're always trying to find talent to take care of our client base, which is huge and growing. And we love them, you, if you're one of them. But it's hard. And for the carriers out there, my heart goes out to them. They're trying to hire people just like we're trying to hire. But one thing that COVID did, it changed the game a little bit when people wanted to go back to work or had to go back to work and figured out they just couldn't have the government keep sending them money, or whatever their strategy was, whatever that was. And let's just all agree that that was a horrific time period for a lot of reasons. Everyone has a different take on it, but it was just a tough time for all of us. We all lost people, know someone who died of COVID. We all probably had COVID. I had it like 4 times. All 4 were different and they all stunk. It was horrific. You know, I had 3 friends, close friends, my age, die from COVID. But what it did, it changed people looking for work. So my heart goes out to carriers that were trying to do and still trying to do the right thing, to process the paperwork, to get it through, to get the annuity guarantees to the public. You know, and with 11,000 baby boomers hitting age 65 every single day, people are looking for contractual guarantees. This was the time period that annuity companies and the annuity industry were waiting on. They wanted it. They wanted this type of demographic tidal wave of demand to happen. And it's still happening. And I think it's not going to subside, but for that 3 or 4 months from October on, it was a whirlwind. It was a tidal wave. It was something that nobody could have predicted, even the annuity companies. And as it came in, they tried to hire. And as the flow came in, they tried to hire. And as the demand came in, they tried to hire. And as the applications stacked up at their doorstep and then their mailroom, they tried to hire. And my heart went out to them because I was trying to hire too. I'll give you a great story. You'll love this. So typically, I never interview the people that work for me. I have consultants that do that. And I might get into the last interview, like the last one. Stan, why don't you meet him for the last time and tell him your vision and all that stuff? Okay, great. So there's a lot of filters to get through, you know, for us to want to hire you, or you get to the process of meeting me or meeting my management team, et cetera. And so we've had people at the end of the process say the following things. Hey, I really want to come work here, but I really would like to wake up in the morning and make a decision then whether to come in or not. And, you know, my comments in this, that's fantastic. You know what that's called? They'll be like, what? That's called being an owner. You need to, and as the owner, I have to work every day. So, you know, we're getting those type of things. Or the person that recently said, boy, this is a great opportunity. You know, I really do want to do that. But I really don't want to work Fridays. Monday's kind of half day, but not Friday. I want to go hard for those 3 or 4 days in the middle. And I'm like, hey, once again, you need to be an owner. Or my favorite, and no offense to this person, I won't mention their name, hired them, great person, and they showed up for work day 2 and day 3 in shorts and a t-shirt. No, I can't make it up, seriously. So for whatever reason, I'm not in the office a lot. I'm traveling a lot. I go back and forth between Las Vegas and Florida, et cetera, our offices. And I happened to be in the office where this person was wearing shorts. And I'm like, why are you wearing shorts? I mean, my question to him is, if you were working at Merrill Lynch or Morgan Stanley, I used to work for Morgan Stanley, would you walk? And I asked him this, I said, would you walk in to there with shorts and t-shirt? And he's like, absolutely not, Stan. No. I'm like, well, you shouldn't do it here because we manage more money than most everybody in the annuity industry. We're not Merrill Lynch, but we're the Merrill Lynch of the annuity industry. He's no longer with us, as they say, but he had a really nice pair of shorts and t-shirt on. My point is this. At this point in time, when I recommend annuities, I look at the claims paying ability of the carrier. I always love when people go, well, Stan, it just goes without saying, I don't want you to put a crap piece of company in front of me. And I always say, listen, you sound like a nice person. I love you to death, but I'm not going to put my license on the line for you. So I'm going to recommend quality. Trust me on that. I mean, that's the first thing. So we look at the quality carrier. We look at the contractual guarantee. So if you say, Stan, I want income to start 5 years from now, or Stan, I want the best MIGA rate for 3 years or 5 years, or Stan, I want the best immediate annuity rate, whatever the answer to those two questions, what do you want the money to contractually do, and when do you want those contractual guarantees to start? Whatever that is, we're going to shop all carriers. We're going to list the top contractual guarantees offered. Then we're going to look at the claims paying ability. We're going to look at that compared to, the top 5 or 10 in that quote. By the way, don't ever let someone just say, this is the best annuity. I've done my research, sir, as an agent. This is the one you need to own. That's a crapola sales pitch. So, we do the filtering process. And as I said before, annuities are commodity products, not one's better than the other. We shop all carriers for the highest contractual guarantees, and quotes change like a gallon of milk every 7 to 10 days. And we have to quote all the time. And if you want to move forward, we lock in the quote. But here's what we have to do now. So we go through all that process. We go through the quotes. We go through the carriers. We go through the suitability. We go through it all. But guess what we're doing now? Unlike anybody else, we will make a recommendation to either move forward with a company or not move forward with a company based on how they are processing the paperwork, based upon how they're treating my staff when we follow up on the transfers or whatever the issue is happening, based upon the time it takes from application being sent to the carrier to policy being issued. That is something that we did not used to track. I've done this for a long, long time. I'm the grill out here, okay? Licensed in all 50 states. We have thousands and thousands, unbelievable amounts of clients. I won't tell them the number because my competitors would love to know, but it's huge. And in the past, we never, ever, ever, ever thought about processing time. But now the new realities of annuity recommendation is just that. There are more than a handful of carriers at the time of this taping, okay, that we are not recommending, even though they have some of the highest contractual guarantees for the products that they're offering in the country. We will step in and say, no, we can't do that to you, Mr. and Mrs. Jones. Their processing time right now is not up to speed. Hopefully we don't put them down. We know the hiring problems they're having, just like everyone's having, but it's your money. And I think at this point in time, to do the right thing, to put the client's best interest first, is to tell them that. So we get a lot of calls. So people go to my site and you can pull up live MIGA feeds and see the best fixed rates. We get a lot of calls and emails say, I want to move forward with XYZ company because they have this rate. We literally have to call them and say, based on our data, we can't recommend that right now because it's taking a month and a half, 2 months, sometimes 3 months with some carriers that we're not recommending. We have to do that. And I think going forward, people are going to follow our lead and do it. Well, if they do follow our lead, they're going to have to spend some money like I'm doing, which is tracking. We are a data company for sure. I mean, I'm not a computer person, but boy, do I hire those people. Okay. I love that. I love data because it makes us better and it makes your experience better. So the new data that I threw at our team, our data team, as they, got out of the Game Boy mode or whatever they do in their offices with all those screens. I said, here's what I want to track. I want to track every single carrier that we use, and I want to track how long it takes for them to process the paperwork, start to finish. And I want an average, I want means and all that stuff, all that math stuff that I didn't learn in college. I want it all. I want to hear it. And then I want you to share it with our management team. And I want you to share it with our consultants. And then we're going to share it with our team, the app team and their support staff, the pending team, the customer service team. And we're going to start disseminating that means giving it away. I think I said that right. That information to our clients when they call, or people that want to become our clients. We are going to proactively step in and say, "Hey, you don't want to do that." I'll give you an example of another situation. We have pretty much the only income rider calculator on the planet, which costs me a lot of money, but I love it. I love it because it allows people to run their own. All our calculators, you can run 24/7, 365, but income riders are pretty popular, and you can run that at your leisure. Consumers only. Thank you very much. Not agents and advisors, consumers only. But there's a couple of carriers on there that are doing what's called teaser rates, and I have advised my staff, we do not recommend the teaser rates. Teaser rates meaning the income goes down. We don't sell anything where income goes down. So those teaser rates, we don't sell those. We don't recommend them, and we tell people about them. But I think the unfortunate thing is during this time period where people wanted the rates and they wanted the guarantees and they wanted these high things, a lot of people got really frustrated, including us, by the way, on how these companies were processing and doing the best they can, I'm sure, the paperwork. It was frustrating on our end because we had to communicate with our clients that it was just slow, slow, slow. And just a lot of the companies, one company I won't mention, literally told us, Stan or whoever the management, the person they're talking about with my management, we don't have the people in place to do the follow-up calls for the transfers, of which we said, great, we're not using you anymore until you can find those people. Until you can get us answers on transfers, you can't just say, well, we don't have the people to follow up on transfers. Then that went to management. Management told, got with the consultants. We put that on the list. We put that on the data, and we're no longer recommending that company until they can prove to us that they have people in place to follow up on transfers, et cetera, et cetera. So there is a new reality to the annuity game, and I don't think it's going to go away because people have found out that all the people spewing I hate annuities are idiots, are stupid, and they have agendas driving it. My pound the table mantra of you own an annuity for what it will do, not what it might do, which is the contractual guarantees only of the policy, is breaking through. People understand it. In chapter 2 of people's lives, they don't want to deal with markets. They just want to either live off the interest or create a lifetime income stream with lifetime income products or protect the principal. They want to do that. They want to go live chapter 2 of their lives. Some of my most popular videos are live off the interest and you've won the game. Why are you still playing? On my on my Shooting It Straight with Stan YouTube series that I do, where I just kind of get up here and 10 minutes I do a topic and I talk about you won the game, why are you still playing, or live off the interest, or annuities for a 9-year-old. You'll love that if you haven't seen those. But I wanted to cover the new realities of annuity recommendations. Now in the future, we're looking at the legalities of how to do this and put it on our site, on giving you a little bit more information on the time it takes for these companies to process it. But I'm very sensitive to that. I was recently some consultants that work for me that were talking about that. And I said, you know what? I don't really like that. I'm always defending the annuity industry. I'm defending the carriers. I'm defending the National Association of Insurance Commissioners. And I think with a lot of these companies that we're not recommending right now, my hope is that they turn it around and give me the call and say, hey, Stan, we can handle it. Try us again. And we will. And we will, because, I want them to be successful. I want us to be successful. I want our clients' contractual guarantee choices to be successful. And, we offer pretty much every carrier out there so you can get the highest contractual guarantees. It's just right now is a very weird time. We're not taking these companies off of our calculators and off of our quotes. We're not taking them off of our MIGA feeds, but what we are doing is, in order to move forward to purchase an annuity, you have to, talk to a licensed agent, me or someone on my staff. And when you do that, then we'll just say no or yes to the one that you're looking at. And that's, that's just the reality of where we are. I think a lot of this also has to do with COVID. When COVID happened, a lot of the annuity industry was not really up to speed from a technology standpoint. And the fact that no one could meet with anybody, it forced a lot of the companies that were dragging their feet to go technology and spend the money. They spent it. They had to spend it because you couldn't meet face to face. Now we We've been a direct-to-consumer, non-face-to-face organization before it was cool. We were there. We were there first. So, we took all, pioneers take all the arrows. We took them early. Now it's cool. Everybody wants to do it. But I think COVID forced these companies across the finish line, actually drugged them across the technology finish line. What that did was good for the industry. But I also think that their technology wasn't mature enough and ready for the onslaught and the demand that happened in October when rates went over 5%, fixed rates, MIGA rates went over 5%. And of course, lifetime income streams primarily is based on your life expectancy, but interest rates do play a secondary role. So if interest rates are a little bit higher, they're going to bump it just a little bit. And it's a commodity product. These companies are trying to get your business, so that it's a bidding war as well. But I think that as the industry continues to mature from a technology standpoint, this will all get better from a processing standpoint as well. I do think that the blockchain technology, and no, I'm not talking about crypto, for goodness sakes. I'm talking about the blockchain technology that is, exchange of data that a lot of these companies are using. That's very solid. I think that's creeping its way into the life insurance annuity space, and that will be an easier way to process the paperwork and get the applications and the annuities issued sooner. And we're working directly with a lot of these carriers to, I don't know, push the envelope, try new things. We're always looking at ways to make this experience for the consumer better, and to make things go quicker. So, because when you make a decision to lock in a contractual guarantee, the sooner that we can get that contractual guarantee in place, meaning the policy being issued by the company, the sooner the money that arrives to the company, the sooner the policy will be issued, the sooner you're going to benefit from those contractual guarantees. We're very aware of that. By the way, the annuity industry is very aware of that. We're all very aware of that. What I'm telling you now is part of your questions that you need to ask, and we're going to ask them for you, is how long do you think this will take? Now, we're going to give you a ballpark, but if it's a company that's taken 2 to 3 months, we're going to say, no, don't do that. And I was talking with someone today about this topic, because I'm going to do this topic. They were excited that I was going to address it. And I said, I really think it needs to be across the board, because I'm not putting down the younger generation or the work, the people that go to work every day, et cetera, like me. I mean, I love when people go, well, people that work hard for their money. That would be us. That would be everybody. Okay. I love how they try to classify that. But even people that have achieved some sort of monetary success, worked hard and still work hard. Can we get an annuity amen on that one? But I think you need to do that whether you're doing a mortgage or you're doing any type of paperwork, annuity paperwork, life insurance paperwork, whatever, any type of transaction like that. How long is it going to take? Now, a lot of these industries are light years ahead from a technology standpoint, ahead of the annuity industry. The annuity industry will catch up. The annuity industry will catch up because there's a demographic tidal wave of people looking for contractual guarantees. Okay, and there's an army of people out there selling annuities or trying to sell annuities. So this will all get fixed. But for now, we're going to ask the two questions. What do you want the money to contractually do? When do you want those contractual guarantees to start? Then we're going to talk about the PILL, principal protection, income for life, legacy, and long-term care. Then we're going to talk about your overall assets to make sure that you're not putting too much money into annuities. That's one of the problems we see out there. And we're going to use as little amount of money as humanly possible to solve for that contractual guarantee that you're looking for, the goal that you're looking for. As an example, you go to my site and you run on our calculators, the immediate annuity, deferred income annuity, income riders. You can do a reverse engineer quote, meaning that you can say, we need $3,000 a month. What's the company that's going to guarantee that using the least amount of money? So that's the way to do it. Okay. So we're going to do all of that. And then we're going to say, hey, we recommend this company. We like this company. And oh, by the way, we also recommend this company because right now they're processing the paperwork, and based upon our data, it's taken about X amount of time to do that. And if it's reasonable, we're going to recommend it. If it's not reasonable, we're not going to recommend it, period. Now, for the people, just to let you know how we're doing it, because we are the only ones doing it. We are the only ones putting a process in place, pro-consumer, to get this right for you. for the people, for the carriers that are not on our list, that have gone into the penalty box, as they say in the ice hockey world, we're contacting them all the time. Hey, how's it going? Hey, tell me about the process. Are you guys caught up? Can we put you back in our recommended list? They're not banished to an island of broken toys, okay, broken and lost toys, as they say. No, we're working with them. We want them to be better. What can we do to help? We're doing that every day. My management team is contacting them all the time. Hey, we want you back in the game. Where are we at? And they demand honesty. And typically these companies are very, very honest with where they're at in the process. Hey, we're backed up, etc. What's interesting to me, and we ask this question, is a lot of these companies still have the higher rates, or high, in that ballpark, in the vicinity of the upper fifth of all, but yet they can't process the paperwork. If you can't process the paperwork, take the guarantee down. Okay. It's like, you can't keep drinking if you're full, right? You can't keep doing that. So it's an interesting time. I've seen a lot in the annuity industry. Okay. I was there when people said you can't sell it direct. I was there. I was the pioneer that when they said, hey, you got to sign the paperwork same day. And I'm like, no, we're going to do it direct. Some carriers wanted to do it. Some carriers didn't. Now they all do. This is the new issue that I never thought would happen. But I think it's great because people want annuities. They understand it. People like me have described it enough with my thousands of videos and hundreds of articles and 7 books that annuities aren't bad. Can't hate all annuities. Annuities are great. Everyone owns one. It's called Social Security, best inflation annuity on the planet. So because of that, you need to dig in and find out what's going on. Now, full disclaimer, I'm going to tell you this right now. It's been a hard run this past year, since October, because we prepared for it as well. We prepared our website, we prepared our staff, we prepared everything. What we didn't prepare for, and I'll take the bullets on this, and I will take the blame. We were not prepared for the carriers to be overwhelmed. I'm not going to say they weren't prepared. They did the best they could. They really did. Bless their hearts, we did too. But if they were the dog that caught the car, we were the owner. We had the leash around the dog and we were chasing behind them, right? So we were caught up in all that too. And so we had to tell clients, no, it's not going to happen, or it's going to happen in 2 months or 3 months, which forced this podcast, which forced us to start doing recommendations based upon not only claims paying ability and contractual guarantees and suitability, but also application time. If you'd have told me last October, Stan, the annuity man, America's annuity agent, always wearing the logoed baseball cap and happy as a clam. If you'd have told me that in October, that the next following year, part of the recommendation process would be the processing of the paperwork, I would have said, you've lost your doggone mind. You're crazy. The companies they'll be fine. And they're going to be fine. That's the other thing I'm going to tell you. The annuity industry, no industry is perfect, okay? But there's some good people running it. There's some good people up top. The National Association of Insurance Commissioners, good. They're doing good work, okay? The carriers want to provide good guarantees. The carriers are working on new products and new strategies with smart people like Wade Pfau and Moshe Milevsky and Michael Finka and those guys. They're trying to create things for you that'll be good for you and pro-consumer in the guarantees that you want. You're just in a time period right now where we just have to be careful who we're recommending from a processing standpoint application. My hope is that in 3 to 6 months, I can do another one of these interruption type Fun with Annuities podcasts and say, hey, we're good. Let's rock and roll. I think they all are ready to roll. Maybe that'll happen, maybe that won't. But I do know this. The recommendations from the annuity man, and we set the table, we set the stage, and we set the trend for the industry. We're going to set the trend on recommending carriers that can process the paperwork, period. Maybe that continues forever. I think it might. We're just trying to figure out a way to do it to where it's positive for the industry, it's positive for the carrier, and most importantly, it's positive for you. Because the more information that you have truthful information, not agenda-driven information that you have to make a buying decision on a contractual guarantee, the better. And as I always say, there's never an urgency to buy an annuity. The urgency is for you to understand what you're buying. And now to add to that, how long it's going to take to achieve that contractual guarantee that you're looking for. How long is it going to take for that policy to be issued so that you can start enjoying the contractual guarantees that you're going to make a decision on? Some people were talking to me today when I was telling them about what I'm going to talk about. They're like, well, that's kind of a negative. And I'm like, yeah, I guess it is kind of, but I think it's a positive too. Because the great part about this country, and the annuity industry is going to do the same thing that this country does. When there are problems in this country, our country is innovative. We fix them. We figure it out. We figure it out how to fix it. We just don't sit there and go, man, that's tough. No, we fix it. And in the interim between it being fixed and that time that it is fixed, we inform the public. And we're honest and truthful and proactive and run towards the bullets like with this podcast. And we're saying, hey, be aware, ask the question, and make sure that you understand how long it's going to take. We're going to track that for you. We're going to be totally transparent. I'll give you a great example of innovation. So my wife is wonderful. Can we just say that? The lovely Christine, she's wonderful. Been married to her for 35 years, okay? Now, she has this conspiracy theory that I don't know if it's true, but she says that I snore. It's just so hard to believe that a person with my jovial personality would snore, right? 6'6", 210 pounds at this time. That's a little skinny, but I need to be skinny for the sugars, right? She says that I snore. So she shows me, I'm like, I don't believe you, but yeah, she's taped it and she's played that back to me. I still think it's a conspiracy, but she's showed me an invention where it's like a headband that you can wear over your ears to sleep with your spouse that has speakers in right where the ears are. But my favorite one was a pillow that had it had a speaker in the pillow, but it was only activated when your ear hit it. And I'm thinking to myself, this is a great country. So you have all these old people like me that's been married forever, and one of us snores. One of us, of course, not both, but one. How do we solve that so we can sleep together and be happy together? Well, the entrepreneurs figure it out. Same thing in the annuity business. How do we figure this out to make your experience better, the paperwork experience better, our experience at the Annuity Man better, the carrier's experience better? There are people trying to figure out why. Because if they figure it out, then they get to issue the policies quicker, etc. Profits, hello, capitalism. I know, evil capitalist. You're evil capital. I understand that. But it's what makes this country great. It's the reason we all live here. It's the reason that we would fight to the death for anybody in this country. Anybody. You know that. You know that. I know there's divisions, but at the end of the day, every single one of us, if we saw someone in trouble, we'd go help. That's what's great. And that's kind of what's happening right now in the annuity industry. There's some processing issues. There's some hiring issues. There's some workforce issues. All of it's going to be solved. All of it's going to be solved. Why? Because we're the United States of America. I didn't want this to turn into some patriotic pound the table thing, but that's the reality. Now, is it going to be bumpy ride? Yeah, sure it is. But as we always do, and as my grandfather always told me, if you tell the truth, you don't have to remember anything. That is our business model. And that is our business model going into the new realities of annuity recommendations, which is talking about all the good things we used to talk about. Claims payability, ratings of the companies, Comdex rankings, the highest contractual guarantee, proportion and suitability of the recommendation. And just we're going to add one more, the processing time. Makes sense to me, and I hope it makes sense to you. By the way, if you haven't caught this, my name is Stan the Annuity Man, and I encourage you to go to my site at theannuityman.com, watch all my videos and podcasts and all that stuff, schedule a call with us. You might get me. How about that? You might get me. But at the end of the day, what I really want to do, someone asked this the other day, I'll close with this. Someone said, Stan, why do you keep doing this? You don't have to keep doing this. Why do you keep doing this? 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 And I thought about it for a second, but I think it's a pretty simple answer for me. I do like to disrupt a little bit. I do like marketing and branding. But at the end of the day, if I have a legacy, I want to leave the legacy that the annuity industry is pro-consumer. That for anyone who says they hate all annuities, they need to be quiet. I think in the future, no one's going to say that if I have anything to say about it. Okay. We're going to make this space pro-consumer. We're going to clean up a lot of the sales practice nonsense. And we're going to make sure people are buying the best contractual guarantees that they can find shopping all carriers. And we're going to work side by side with every single carrier out there, every single one, to make this industry better so that you, the consumer, as you enter chapter 2 of your lives, can find and get and lock in and own the best contractual guarantees available for your specific situation. That's pretty much it. Hey, thanks for joining me. I promise to have guests back on the next time. But for now, my name is Stan the Annuity Man. I'll see you next time.